Hi, everybody. Welcome to the fourth episode of Crypto Clarified, Investing in the Truth. This is the podcast series where we come together once a month to go through the biggest headlines going on in the crypto space. My name's Jason Guthrie. I'm head of digital assets here at Wisdom Tree in Europe. I'm joined today by two colleagues, both Ben who works in the strategy team here at Wisdom Tree, and Camilla, who's founder of the Defiant Media. We've got some interesting topics to talk about today. We want to have a look at the current market environment. We want to dig in a little bit to Diem and stablecoin projects and what's been happening in that space, as well as CBDCs and some of the recent government events, like as recently as today. It's been an interesting, I think, couple of months. I think, we need to talk about the market situation and how things are going. We've had somewhat of a bounce off the bottom, but there still seems to be quite a pervasive negativity in the market, I would say, around, are we going into a new crypto winter? And I think we should kind of maybe dig in a little bit to sort of what's driven it and what's driving this sort of sentiment that we're seeing. I think we're very lucky today. I mean, you two are my go-to for two of the biggest ecosystems within crypto. Like Ben is my Bitcoin guy, and Camilla literally wrote a book on Ethereum. So hopefully we can get some good insights as to like what's going on and what the feel in the ecosystem is at the moment. I don't know, maybe starting like Ben, what's your opinion on sort of what's driving the recent market moves, why we are trading 50% off peaks?
Well, it's a pleasure to be back with you, Jason. Nobody likes clarifying crypto more than Benjamin C. Dean. It's a new year. Cami, it's a pleasure to meet you as well. It's great to be here with you, and I'm looking forward to chatting with both of you today about what has been indeed a turbulent couple of months. It's kind of a couple of theories around what's going on at the moment. One set of theory is the hardcore Bitcoiners say it's the halvening cycle. Every 4 years, Bitcoin halvens. The number that's created every 10 minutes splits in half. We're in month 20, and crypto winter kicked off 4 years ago, almost to the day. And then there was another downturn 4 years before that. So one school of thought says it's all cyclical, and this is unsurprising. The other school of thought says this isn't 4 years ago. And we can unpack a little bit about how things in this ecosystem are different to the 4 years ago, the last crypto winter. I'll unpack that a bit later, but Cami, I'm interested to hear about what your thoughts are. Where are we? And do you subscribe to the halvening if you're the Ethereum person? There's no halvening for
that. Okay, so on the halvening, I think that it definitely contributes to the run-up in prices. I think we've already seen enough examples of this happening historically that you can say, okay, like this expected reduction in supply really influences prices on the way up. On the crash, though, I think it's much of what's driving traditional markets is also driving crypto. I think this kind of narrative that crypto is completely unrelated to the rest of the market, I think is proven to be incorrect. At times when volatility spikes, correlation goes to 1. And that just includes crypto. Crypto will be correlated to riskier assets like equities. And so when there was speculation and the expectation that the Fed would raise rates, the market sold off and crypto sold off with it. So I think it's pretty straightforward what's driving the crash at the moment.
Yeah. I mean, you're right. I think when volatility spikes, when there's risk off, everyone's going to run for the door on whatever they've got, right? They want to go back to what they've got the most spending power in, and that's still their local currency. But, I think this idea that it's not 4 years ago is really interesting too. Like crypto's only 10 years old. Everyone talks about how various asset classes behave in various market circumstances. Crypto's never existed during a rate rise cycle. It has never existed during like a non-zero interest rate period, let alone rate rises. And so it is pretty unprecedented. I mean, it's unprecedented globally anyway, like what happens as we start to unwind QE programs and things like this. I think cross-asset class, it's going to be very interesting. Not a bit difficult to predict, but I think, taking a step back and thinking medium, longer term, is the right thing to do in these circumstances, right? Like what price does short term is impossible to predict. Picking stocks is throwing darts at a dartboard anyway. What I'm maybe more interested in is what is this price? Look, does going into something that looks like a crypto winter affect the ecosystems? Do we continue to develop in the same way? What's the medium long-term outlook of how this space develops?
Well, if I jump in there, one of the things that's different that you just touched on is institutional investor participation. Like 4 years ago, there weren't really any institutional investors participating. And you can watch it exactly when there's market stress, who's off selling? These new big players in the game. Hey, one of the interesting things about this market at the moment is the way that it's diversified. If we wound the clock back a year ago, NFTs would have been like a weird thing for someone to bring up. I've gone and like disaggregated the market. So it's true that the overall digital asset ecosystem has shrunk over the last couple of months, but in that same time period, stable coins are up like 20%. Everyone's getting US dollar pegged tokens. And where are they putting them? DeFi. It's flat. The DeFi ecosystem is experimenting, growing. It has not contracted. And the last one is the NFTs. I mean, that segment of the market is entirely new. So if you were to think about what a crypto winter looks like this year, you have to take into account the fact that there are these segments that are still growing, even in what is an overall kind of shrinking ecosystem. Cami, I know that you've looked at the NFT articles and what's happening in the market there. What's your perspective on it?
So I think more broadly, what's the big difference versus 2017, 2018 is that there is a more sophisticated, active, and just a deeper cryptocurrency ecosystem this time around. Last time I was covering the crash at Bloomberg News, and it was all about ICOs and price go up and not much else there. So this time around, we have actual use cases beyond speculation, beyond kind of digital gold, but actual kind of decentralized finance, like financial services built on public blockchains. And that's a huge shift. DeFi didn't exist in 2017. It simply didn't, like not even the term. And now we have decentralized central banks with MakerDAO. We have lending and borrowing, decentralized trading, all of these things that provide real kind of use and fundamentals to crypto that I think provide a base, like a baseline that will make it sustain and weather a sell-off in a much better way than what it did in 2017. So maybe like prices will drop because it's a risky asset. So people will take chips off the table when the macro environment is more restrictive. But that doesn't mean that, as last time, everyone will just go and leave the space, because there's more to do there. You can stake stable coins for yield. You can still take advantage of like low borrowing rates and take collateralized loans on DeFi and so on. And then you mentioned NFTs, and that's a huge new use case and sector that just like wasn't around in the same way in the past bear market. So yes, we did have crypto kitties, but I think that was kind of like a one-off, like the first iteration of this that like famously slowed down the Ethereum network to a crawl and so on. But today we have thousands of NFT projects, and it's really become a mainstream phenomenon where creators everywhere who had never experimented with crypto before are using this tool to monetize their work and access a global online market. So it's becoming a real kind of use case for a whole new wave of users that's coming to crypto because of NFTs. And this sector is still booming. Just yesterday or like a couple of days ago, there was a new record sale for a CryptoPunk. Like Bored Apes floor price keeps rising. They're still selling for millions of dollars. The other day we just covered a spin-off of Cool Cats that sold cool pets, and of course, like the drop happened, and there was a gas war, and it sold out in like a couple minutes, and like the classic kind of like frenzy type of story is still happening on NFTs. So it's still interesting to me that kind of NFTs have been pretty kind of spared from the downturn.
Well, yeah, look, you've mentioned a lot there, and I agree that a lot of new things are here and they've taken hold and they're going. But like you mentioned ICOs, like that market was shaken out in a big way after the 2017-18 sell-off and hasn't really re-emerged. And people talked about it in not a dissimilar way than what you're talking about a few of these DeFi concepts, right? Like this is a whole new way that we've democratized equity raising and it's bringing it to the masses, and that has fallen flat over the preceding 4 years. So like, what's your view on what could get shaken out in a prolonged kind of crypto winter? What's going to thrive and probably what's going to evolve from the way it currently is? Like NFTs, is no secret that I'm a fan of them, but I don't think, rich people spending millions of dollars on collectibles is necessarily going to be the mass market use case that drives us forward. So what do you think falls away? What do you think grows? What do you think changes?
I think what clearly falls away is all these yield farms, and I think we're already seeing them kind of be shaken out. So in the height of the market, DeFi saw this explosion of like yield farms, which for those of you who might not be aware of this, it's a system where DeFi protocols incentivize liquidity by uh, giving users some yield on their deposit, plus is the protocol's native or the project's native token. It's basically like a marketing expense. Like the project spends money in tokens and distributes these tokens on top of whatever yield they're giving depositors, and that's a fine kind of marketing mechanism when there's actual kind of value underlying these protocols. Like Compound used it, and it started this thing. But Compound is like a real project that's incentivizing users to lend and borrow on its markets, and it's legitimate and fine. I think everything kind of went awry when there were projects with like absolutely no real value or innovation or product uh, launching these yield farms just purely for like the yield farm. Like there was nothing to incentivize
Right.
there.
So this was where we sort of got that cycle of, okay, we copy the USP of another project. We'll offer them, say, a higher nominal amount of our native token as a reward to try and suck the users from one project to another. But that value only existed if the project's got success, and the project only has success because they were giving away the reward. And everyone would just sell that native token the second they got it, meaning the price went to zero, and then everyone pulled their capital out and chased the next reward, right?
Yeah, exactly.
It was sort of just this
like musical chairs. Yeah, so I think that's already been shaken out. Like the yields aren't there anymore, and yeah, that was totally a product of like excessive hype and exuberance in the market last year. So I think that's a clear one. As for NFTs, I agree with you that we're kind of just seeing the tip of the iceberg of how this technology can be used. I mean, it's such a basic primitive for like the Internet of Value. It's digital property, and sure, like right now, like the first version of this, it's like art and PFPs, like profile pictures, and okay, that's fine, but I think you're right. There's so much more to do with this.
Okay, that's interesting. Can I get you to comment a bit on, again, what a prolonged price depression does to the growth of Bitcoin's ecosystem? We talk a lot about like global adoption rates going up, about what we saw happen in El Salvador last year. Are these attractive moves for people if we get stagnant price, if we don't get triple-digit growth?
Sure. Did I just hear that the apes and the cats aren't going to get us through this? Is that what I'm getting from everyone? That's sacrilege. Now, you've touched on something that's extremely important, ICOs. Remember, as you said, like last time, why were initial coin offerings a thing? It's because these teams couldn't get venture capital. There was no risk capital available. So they raised their money via ICOs. About 5% of them actually delivered what they said they would deliver because they were high quality teams run by competent people with integrity. And then 95% of them went pop, like a lot of early stage venture. You may have noticed, but in the last year, there was more venture capital investment in digital assets, blockchain and crypto, than the 5 years prior combined. And so what does that mean in a world where the Bitcoin price goes down? Well, it can be a nice thing when the Bitcoin price goes down because all the people who run around hyping it up disappear and the kind of troll farms aren't profitable anymore and disappear. And what are you left with? People who actually build things. People who have been here for years who have some integrity, have some plan as to how they're going to build technology that's ultimately useful to people, stuff they're willing to pay for. And the venture capital there is now to cushion a potential downturn. It was not there 4 or 5 years ago. Now, that could have two effects. On the one hand, it could keep a whole lot of things alive that really shouldn't be progressing. On the other hand, it's going to give some folks more of a runway than they would have had 5 years ago, which might ultimately pay off. So anyway, it's a tricky one. It's like anything here. It's complex. It's fast moving. There's countervailing forces.
Are we going to get a pullback from like adoption though? If you're someone in a third world country that was looking at Bitcoin as a store of value, but have just watched 50% get wiped off the top, or if you're El Salvador central bank with this on its balance sheet, does this slow people down?
I don't think so. Like, because you've assumed there that people have bought the literal top and they've put everything in the literal top. Like those same people a year ago watching this thing go up, 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 up. They know it's volatile. That's like the worst kept secret in the whole space. Yeah, it's volatile. You'd be surprised. A lot of these folks know how to manage their money. And when they've got US dollars side by side with Bitcoins, they'll manage it accordingly. But no, I don't see it slowing adoption meaningfully any more than in the past 8 to 10 years. We've seen the volatility and it hasn't stopped us getting to this point. That's my opinion, though.
I think that's probably right. I mean, we hear that anecdotally all the time from institutional clients. Surprisingly, the volatility is not scaring them off, which I think was a really interesting sort of piece for us to kind of be hearing. How about the ecosystem outside Bitcoin and Ethereum? We've seen that was big news in the run up to, well, the end of last year in terms of like layer 1 Ethereum alternatives, as well as the layer 2 things like Polygon. But a lot of these have fallen out of favor, right? Solana and Cardano especially seem to have really had the sheen taken off them. Do you think this is a trend that continues?
Should I take it or
Please go ahead. Yeah.
Okay. I think there's still a lot of appetite for alternative layer ones, alternative to Ethereum, that is. I think, yeah, like Solana has been down, and that's kind of maybe is deterring people from using it. Cardano launched, and it was very disappointing. If you look at Robin Schmidt, the DeFi video director, testing out some of the Cardano decentralized apps, you'll see that it wasn't very encouraging to see. So, but other than those two, I think there's a thriving alt layer 1 ecosystem still going on. I think Avalanche is a good example. They're attracting a lot of volume. They have a pretty good DeFi ecosystem going on there. It's a more scalable base layer. than Ethereum, than Bitcoin. Polkadot is launched its parachains as well. They also have a thriving DeFi ecosystem, doing some real kind of innovation. And then I think something to watch is the Cosmos ecosystem. I this one, like, it's been building and building for the past few months, and like kind of quietly creeping up, and now there's like 30 different Cosmos chains, with like pretty decent volume. And well, the Terra ecosystem is just huge, with UST, the Terra stablecoin, and Luna, and like all of that. So yeah, no, I don't think that's slowing down. I think there's just so much demand for block space, and Ethereum is providing is covering some of that demand, but that's making it, of course, famously expensive to use because there's so many people on it. And even during the crash, like, gas prices are still high. So you see people are like as Ben said, like, total value locked in DeFi is still over 200 billion, and that's, at like December levels. So DeFi hasn't crashed. People are still using this ecosystem, which means Ethereum is still at capacity, and that will just like keep pushing people to other layer ones.
No, that makes sense. Speaking of things that have maybe lost a bit of their sheen, Diem. I want to talk about Diem and Meta to an extent. So those that aren't familiar, Diem was a stable coin project and a private blockchain project that was being run by what was Facebook at the time, is now Meta, and was sort of their first foray into the cryptocurrency world. That project kind of continues, but has somewhat, I think, fallen on its face. I mean, I see a pretty bipolar set of commentary from the crypto Twitter sphere out there, where half the people are talking about it potentially getting listings and its ability to get adoption, and then others are talking about it being dead. And I think it's a really interesting one to maybe talk a bit about at this juncture, given Ben already mentioned how much flow there has been into stablecoin. CBDC conversations continue to keep going, and there's some very interesting news out of Canada today, as a result of sort of people using cryptocurrency to fund the kind of truck driver protests. So starting with kind of Diem, Ben, have you got an opinion on sort of where this project is and what its future is, or maybe even just starting with how it got going, what the aim was, and why it maybe hasn't got the legs that people thought it would have?
Yeah, that's good to start with where it came from, because it helps you understand why it played out the way it did, and then why we've gotten to the outcome. I don't know if either of you remember playing Farmville. Do you remember Farmville?
On the Facebook games.
Yeah, Zynga put it on Facebook. And do you remember how you used to buy things in Farmville?
Some magical internet money, right?
Facebook credits. You used to buy Facebook credits, which had like a stable peg to whatever local currency you had, and you bought it to like get a tractor and some turnips and do some farming. Facebook used to take 30% of the revenues from Facebook credits. And at some point, somebody in Facebook would have looked and said, this Bitcoin thing works. And instead of running over the Visa and MasterCard rails and paying them money for people who are on our platform, we've got smart tech people internally. We have lots of money. Why don't we create our own cryptocurrency? And then we can put it all throughout the Facebook universe, and we'll run on our own rails. Now, Facebook came up with this idea after 2016, when kind of the world had soured on them, and tried to put together a consortium based in Switzerland, kind of their competitors and peers across the banking, payments, tech, even the non-for-profit space. They had this consortium of like 30 members who were going to build this permissioned blockchain called Libra, and then rebranded Diem. And this guy, David Marcus, who had previously been in charge of Facebook Messenger, was put at the helm of this project. And very quickly it ran into resistance from regulators. And we do have some time to unpack the reasons for that. It's kind of interesting to unpack the idea that they started with the idea that the cryptocurrency inside Libra, Diem, would be a basket of currencies. It'd be like special drawing rights. So you take 5 different fiat currencies and you bundle them in different proportions. And in that way, it would be less volatile than any one of them alone. And that quickly ran aground. The other issue they had was around financial crime. They wanted to create eventually a permissionless kind of open, interoperable way in which you could like plug your wallet into this. And that hit a lot of regulatory concerns. The final was around antitrust. Like post 2016, 2017, antitrust became the word around Washington. And the idea that Facebook and its consortium might be like the private consortium that runs the world's payments, plugged into a user base of 2 billion people, didn't fly. So that takes us to the present day. That's a quick history tour, but it gets us to where we are at present. Cami, I don't know if you spend as much time as I do obsessing over arcane payments networks and attempts at them, but if you followed any of it, I wonder what your view is on the fallout now that Facebook Meta has thrown the towel in on this.
I think it was so interesting to watch, because when Facebook came out announcing their stablecoin, it was immediately seen as a very plausible competitor to the major stablecoins out there, USDT, USDC, because it's Facebook, it's huge, it has billions of people as its users. It has like the minute the stablecoin launched, it would already beat any other cryptocurrency out there in number of users. Was kind of the the narrative.
Mm-hmm.
And then as it happened, because it's Facebook, because it's so huge, it had to deal with all these kind of regulatory pressures. It's already kind of seen as a monopoly. There's already concerns about how Facebook treats and handles people's data, and it's Facebook is just not very liked at the moment by anyone. It, it's no, it's not liked by regulators, and I don't think it's liked by people, like by regular users anymore. Like everyone's kind of loosen. Facebook has lost people's trust. Basically, is what it comes down to, and that's, I think, the core reason of why this stablecoin or like cryptocurrency project failed. And I think it will be interesting to see where Facebook's other crypto or like similar projects go. Of course, I'm thinking of the metaverse, and I think it's the same thing. It's like, when Facebook steps in, you immediately have to watch it. It becomes like the big elephant in the room. But I suspect we'll see the same thing happen with Facebook's metaverse. Like, yeah, like sure, like Facebook is huge, but this is not its playground. Like cryptocurrency, the metaverse. Like, this is not what it does. And I think, yeah, I think like Facebook's time has passed, and there will be a new crop of startups that seizes this kind of Web3 moment.
So basically, like what I'm hearing is Facebook isn't trusted enough for people to be, for people to give it their money. Like maybe they'll give it their photos, but anything more valuable than that, their time has probably passed. I mean, arguably, if they persisted with it, then the couple of billion users they've got, that is a huge client base to start with. But this trust issue, I think, is obviously a big deal within financial services. Do you think that this means that any big corporate is going to struggle to enter the space? to run a stable coin? I mean, obviously the groundswell that we've seen is one of open source software, is one of decentralization, is organic. Do you think that there are lessons to be learned here for other corporates, that this is an area that they're going to struggle to play in? Or do you think we're waiting for the right guy to come along and try to do a Diem equivalent, but from whoever?
No, I think most corporates will have trouble doing this, incorporating crypto in a meaningful way, because I think, to do this right, the entire model of traditional corporations, they'd have to change it. It's like, okay, to do crypto and like the metaverse and NFTs in the right way, you have to become a DAO. You have to become decentralized. You have to be able to put yourself out there and put these cryptocurrencies on an open public blockchain. I don't think corporations are ready or willing or even thinking about doing this. So I think whatever they launch will be very limited in scope. Like, maybe it will kind of be okay in engaging their user base, but it won't be a kind of a meaningful step forward, or like a project that really makes an impact in the broader cryptocurrency ecosystem. So I'm not saying like every corporate led crypto project will fail. I think it can have limited success, but I don't think it will be kind of the killer like crypto app or cryptocurrency that people kind of end up using.
I think that's probably true if you think the crypto universe is what's there today, right? But there is an argument to say, like, it's not an argument, it's fact that we're in the early stages of the growth of this space, and the users, the developers, the community that exists there today, they're early adopters, they're technophiles, they want to do this on the edge of technology, innovation type stuff. But when these things go from sort of this phase to like early majority or mass adoption, it is a different ballgame, and it's going to be a different set of, I guess, principles, approaches, marketing effort, user engagement, usability that's going to help us get there, right? So there's maybe an argument that, okay, they're not going to have a big impact at this stage. Maybe Facebook was just too early having a go at this. Maybe they do better once we sort of start to get to that early majority phase.
Cami mentioned something there, and I hear it all the time with clients. They just say, why can't I build my own database and then I'll be Bitcoin? I'm like, you're missing the point. It's a new way of thinking. You plug yourself into open source protocols. You don't control them. You ride on them like rails, and then you can create value for people. Hey, I've been dying to use this tweet here, so I have to mention it because it's related though. It gets to exactly the point Cami just got to. David Marcus, the guy who ran Libra/Diem, you got to feel for this guy, right? He spent 7 years of his life with all of Facebook's money, and they still couldn't get this thing off the ground. He kind of took a few months off after he resigned or left, and then he emerged again on Twitter to say the following. He says, Bitcoin is truly leaderless, censorship resistant, and has much greater network effects. In essence, it's unique and cannot ever be replicated. Its creation truly was the Big Bang event of crypto. Hey, this is a guy who literally spent the better part of the last decade trying to build Facebook's own cryptocurrency, didn't succeed, and then has turned up and said, leaderless, censorship resistant, network effects, and he also means open source. They're the ingredients you need to put together to be successful in the space. And it does relate exactly as you said earlier, Jason, to what's happening right now in Canada. People are having their bank accounts shut off from them, and they've realized that actually it's not their money, it's held by someone else, and you have to be able to trust the institutions that hold it, or the governing bodies that regulate it, or you hold the private keys yourself. And,
right. And that is a very interesting bit of news or a data point that's sort of super relevant to this. So for those that aren't aware or are listening back to this, there was news out of Canada this morning where they've passed some legislation that shields the financial institutions there from any civil liability for freezing a bank account, meaning that they can freeze an account for whatever reason and can't get sued for it, which takes away a lot of the recourse that individuals have that are operating within that financial system that are reliant on those banks. And this has sort of been an evolving story, or is sort of the last move in this evolving story, which started with a GoFundMe page for striking truckers. which got shut down because GoFundMe was pressured to do so, which then moved to, well, donations are going to get made in crypto, something that can't be sort of shut down by authorities. And now this move has been made with a view that, hey, if people are doing this activity in this ecosystem we don't control and don't like, we're going to restrict their access in the one that we do control, which is an interesting move to happen in a very well-developed, liberal, high amount of freedom country. And also, I think, takes us to speak very naturally about central bank digital currencies and how these could be implemented and whether they are adhering to or delivering on sort of that set of principles that you've mentioned there, Ben, or, you know, devil's in the details with any of these types of things, if they're deployed in a way that, instead of allowing more control for the user, could provide more control for the state.
It's really interesting to watch the central bank digital currency kind of movement. Why is that happening? And why is it happening in the parts of the world that we're seeing it? You just mentioned, Canada. Usually you think industrialized nation, functioning financial system. The problems we're outlining there are the kind of problems people face in what's sometimes termed emerging markets. Last time I was on the show with you, I ran people through some of my experience in Venezuela with dysfunctional macroeconomics, dysfunctional central banks, and dysfunctional politics. But Cami, my understanding is that you spent time working in Argentina. And so you can explain what happens to a country as it spirals into inflation because central banks aren't doing their job correctly.
Yeah. So yeah, I worked in Argentina for almost 4 years. I'm originally from Santiago, Chile, which is much more. It used to be the more stable country in Latin America. Not so anymore, but beside the point. In Argentina, my first year there, I witnessed how Cristina Fernandez one day announced that people would not be able to buy US dollars, and kind of similar to what's happening in Canada today. It's like everything is working until one day it's not, and there's like nothing you can really do about it. Like, the truckers had access to their bank accounts yesterday, and then today there's some measure that says that they can't. And I kind of empathize how I was feeling what they're probably feeling, which is like, this is my money, like, how can the government tell me what I can and can't do with my own money in my bank? Like, I had Argentine pesos in my bank account, and the second I got to Argentina, my coworkers told me, you, like, as soon as you get your salary in pesos, you need to buy dollars. They like pay your rent or whatever, and then buy dollars. And so I had taken their advice and had been buying dollars, and of course everyone does this to protect against inflation. And then one day the government says you can't buy dollars anymore, and it was just like that. And I went into my bank account online, and where there used to be an option to exchange my Argentine pesos into my US dollar account, that option just wasn't there anymore. And whatever pesos I had in my bank were just, I was stuck in Argentine pesos, which were devaluating every single day with 25% inflation. So it's a very kind of frustrating, angering feeling, that of like not being in control of what's supposed to be your own money. And yeah, that's kind of exactly what crypto is for.
My guess is the response to that sort of feeling is you want to leave the system, right? And that's definitely what we've seen in Argentina. Like, if an authority, a government, a system of any type tries to exert undue influence, I mean, you're going to want to leave, right?
And so what problem does central bank digital currency solve then? The reason people are going to stablecoin US dollar peg tokens and Bitcoin is because they don't trust financial authorities to run monetary policy responsibly.
Yeah.
It's too expensive to move money across borders from cell phones because none of this stuff is digitally native. Like, the central bank digital currency doesn't solve the root problem.
Of
No,
trust.
And
Yeah.
I think that concept of trust is sort of everything, right? Look, it's going to speak to, there's a lot of nuance in the way that you can do it. Maybe some central bank digital currencies will be successful and some are going to fall flat. And I think that's going to be kind of place to place. But what I take away from sort of all of this, whether it's Diem or people's experience in Argentina or sort of looking at what's happening in Canada, is if you want to build trust in your implementation of this, it's going to need to be open and it's going to need to put the user at the heart of it, the consumer, the individual at the heart of it, and give them control and not have ways in which they're going to exert too much influence on what they can do with their money, as you put it, Camilla. And I think if central banks want it to have a degree of uptake for people to be excited about it, they're going to need to work all of that in.
In the end, if a country's currency is devaluing against the dollar or against other currencies because they have bad economic policy, a digital currency isn't going to fix that. That's going to remain the case whether you're in fiat or in digital assets. So I think that's kind of the core of this situation. If a country that has a strong economy isn't kind of inflating their currency away, if they implement a CBDC, people will trust it because people will already trust their currency, and maybe CBDCs will help in having their entire financial system work more efficiently. But if on the other case, that it's not going to work. I think the risk in both cases is that things like what happened in Canada today, it's just easier. It will be easier for governments to exert control over people's money because it's everything is on chain. You can more easily track people's movements, people's accounts, and I think that is kind of an additional risk here.
Yeah, no, it's going to be interesting to see how they actually put this down. I think you're right. People aren't concerned with the underlying mechanics. If your economy is failing or your government's mismanaging it, then it doesn't matter if it's digital or whatever, gold-backed fiat. People are still not going to want to be part of that system. I think one of the most powerful things that we're probably going to see from Bitcoin, I mean, I've been saying this for a while, but if we go forward 20 years, suddenly there's a yardstick for running an economy, right? That you have to do better than, which is something like Bitcoin, something that is there and is stable and is predictable and has a fixed supply, and a portion of global GDP will probably be transacted in it. If you're a central bank and you want your citizenry to conduct business in your currency, you need to do a better job at managing it for them than what they can get natively on the internet. Otherwise, people are just going to vote with their feet. So at least it's a standard and measure of a bare minimum degree of stability you've got to provide. And I think that probably puts a lot of pressure to not just act for, special interests or, the political elite that might have undue influence on what these sort of institutions do while everyone else bears the brunt of inflation or whatever else, but that you can actually vote with your feet day to day on whether or not that policy is working for you.
It's kind of interesting. I said at the top of this, stable coins, so US dollar peg tokens, had seen a lot of growth the last 3 months. Inflation is like officially 7.5% in the United States of America right now. That's the official CPI number, and we know how that's calculated. So there are people around the world who would rather have US dollar tokens than their local currency. It's also competing alongside Bitcoin and other alternatives. It is going to be fascinating to watch how that plays out. Just as you say, Jason, people will vote with their wallets or with their feet. And when given the option, what do they choose to hold? They still choose to hold US dollars. And they choose to hold Bitcoins as well. It's a super interesting dynamic to watch play out.
Yeah, definitely. All right, guys, as usual, we've sort of run a bit long. I have a couple of questions from the people watching live, which we might try to answer very quickly. One is in regard to Facebook. So they're down 26% recently, 230 billion off their market cap. Do we think that their involvement in crypto metaverse is a driver of that?
If anything, it's their lack of involvement.
Well, I mean, we have seen, look, every company that's out there and has a heavy kind of exposure to crypto has taken a bath recently, but I don't think they're on their own. So we know that tech stocks have sold off majorly, and anyone that's correlated to that, which Bitcoin in a sell-off, I think we talked about this at the top, is right now in a risk-off environment correlated to tech stocks pretty highly. So I think everyone's kind of in that bucket together. To say one's causal and one's following is difficult to parse, I think.
Yeah, which way does the line of causation go? Is it Bitcoin's being dragged down by Meta and the sell-off in tech stocks, or is it Meta being pulled down by Facebook?
It's probably a bit of
Meta pulled down by Bitcoin. No,
I'm
joking, but like,
yeah.
let's just say difficult.
Yeah, no, but I don't think that they're like Facebook has had a lot of involvement in crypto. Like, okay, like their failed Diem experiment, and then there's like their metaverse experiment, which isn't really crypto. It's just like this virtual reality world that has like nothing to do with crypto really. So they're not really involved. They're just like trying to rebrand, and I think what's driving that rebrand is what's driving the decline of the stock if it's kind of falling more than the overall market. It's like it just like feels a bit desperate, to just like have something new and shiny, and that kind of distracts from the fact that people aren't liking Facebook anymore. So
yeah, no, I tend to agree with that.
TikToking.
Yeah,
it's true.
Cool. So look, the next one, and probably the last one we've got time to answer today, is just asking for comment on the news out of India and their intention to launch a CBDC. And this is maybe interesting because it is sort of a stark pivot from where they were 4, 5, 6 months ago, which was indicating they wanted to ban digital assets generally. So any thoughts on this? Is this sort of a indication of sentiment in maybe sort of emerging economies as a direction of travel, as a willingness to embrace this, where maybe previously there was reticence by central authorities?
I think it's just like specific to India. I think like just like emerging economies are so different among themselves that it's hard to kind of pin an action from one and say that it's indicative of like the entire region. So I wouldn't take India's actions as kind of a trend in overall emerging nations. In CBDCs, like there are so many experiments and just like countries considering this. I think like it's interesting to watch. Actually, the Caribbean is the region that's actually has like functioning CBDCs. So that's something to watch. And then elsewhere, like in there's like CBDCs being studied in like in Europe, in Ukraine, in China, in like Sweden. So I think it's like all over the map.
Yep. Yeah. Okay. That's a good point. All right, guys, I think we're out of time. In fact, this thing is pinging me, telling me that we're over yet again. So with that, we'll finish off today. I hope everyone found the podcast useful. I found it really interesting, as always, to talk with you guys. If anyone has any further questions or wants more information from us, please feel free to reach out. Contact details should be attached to the description for this one. So thanks again for listening, and hope everyone has a great day. If you'd like to learn more about cryptocurrency trends, WisdomTree hosts a wide variety of research and educational resources. Visit our website at wisdomtree.eu/crypto to stay current on the latest crypto developments.